Okay, next we move to the example of calculation for national income using expenditure as well as product approach. So please notice that in your syllabus, the income approach will not be tested for calculation. So you need to only know the conceptual part. So for expenditure approach, if you still remember, the formula that I introduced just now is GDP MP equals to C plus I plus G plus X minus M. Notice that in this formula, only one item that you will deduct, which is the import, because import means you buy goods from overseas. So the goods does not belong to you. So you buy from overseas. So money you need to pay to them. Okay, so that's why you need to minus from calculation. So before you calculate, you need to have a look on the item given and you identify first, when are you going to use this item? So I will denote E to represent that this is the item in the expenditure approach, the first step in expenditure approach, and then I will note as the change from market price to factor cost, or from GDP to GNP, or the formula for national income or personal income or disposable income, so that you know that item you only use it at that for that purpose only. Okay, for example, you have the first item, public current expenditure. If you still remember, public sector means government. So public current expenditure represent the government expenditure, and it is inside the expenditure approach formula. So I will denote it as E, represent the expenditure approach. And then you have the household consumption. This household consumption is this item C. So this is also under expenditure approach. Gross investment, it is I. So this is also under expenditure approach. Indirect tax. When do you use indirect tax? If you go back to your formula, indirect tax, you only use it if you want to change from market price to factor cost. From market price to factor cost. For the next item, factor income received and factor payment, these two items, you only use this when you want to answer GDP to GNP. For depreciation, you will use this item if question asks you about national income. Subsidies, you use it when you want to answer from MP to FC. And the last two items, import and export, you can see here, you have export and import. So this is also under expenditure approach. But one thing that you need to notice here, import, you need to minus. So although the value is positive, I will just put here some information, this negative sign, so that in the calculation later, I must deduct this value. So we can start with the first question, GDP MP. Remember, GDP MP, go to your first step, introduce for expenditure approach. Is it similar? Yes, because expenditure approach will always start with GDP MP, and same goes to the first question asking you about GDP MP. So you can straightly apply the formula C plus I plus G plus X minus M, and whatever you have denoted as expenditure, you plus everything except for the import, and you can solve this. You will get the answer for GDP MP equals to 262.1 million. Please take note that when you do the calculation part, always start with the formula, the calculation, and the final answer together with the units. So for example, this question represent 3 marks. So how you will get this full 3 marks would be, first, the formula will give you at least half mark, 1.5 for the calculation, and the other 1 mark for the final answer. So if you don't include formula, you will lose half mark, If you forgot to show the calculation, you just put the final answer, then the maximum that you can get would be only 1 mark. Okay, so always start with formula, calculation, and final answer. And then we move to question B. Question B asking you about, please calculate GDP at factor cost. So in this national income accounting question, normally you can use the other question to help you to answer the other question. Okay, so in this case, for question B, you look for the first to the previous question. In here you have GDP at market price, but now you want the GDP at factor cost. So this is GDP, this is GDP, means you don't have to bother on the first part. But for the second part, MP, this is FC, means you need to convert this from market price, you need to change to factor cost. So go to the formula. From market price to factor cost, what should you do? You need to minus indirect tax, and you need to plus subsidies, and this will give you the answer for GDP FC. So the item that you use to calculate here, so you remain this item. So this GDP MP, you carry it together with you, GDP MP, and you continue the formula, minus indirect tax plus subsidy, minus indirect tax plus subsidy. So this GDP MP, you already have the figure. You just put the value, and then indirect tax and subsidy, you can get the value from the table. And you solve this, you will get your final answer. And remember, don't forget the units. And then to answer question C, it is not necessarily that you must use the previous item. You can use any question that you have answered to help you to answer this question. And in this case, I'm not going to use B to answer C. Why? Because if I use B to answer C, I need to use a long formula, because from gross domestic to gross national, I need to convert. And then from FC to MP, there's another one difference. So what I can do is, I can use other item. In this case, I also have GDP MP. And this GDP MP, and for question C is GNP MP, it's better to use A to answer C, because A is in market price, C also in market price. So I don't have to adjust anything for this market price, because both in market price. The only difference is, in A you have the value at gross domestic product. Now you want the gross national product. So from domestic to change to national, go to the formula. From GDP to GNP, what would you do? You will plus FIR minus FIP will equals to GNP MP. So the item that you use is GDP MP. So the item that you use, you remain here. And then you continue the formula, plus FIR minus FIP. So this GDP MP, you can find here, the value would be 262.1. FIR and FIP can be found in the table. So you put the value and you answer this together with the units, and you will get the full marks. And then to answer question D, like I said just now, you can use any other question to help you with this new question. So in this case, I don't have to use A to answer D. I can straightforward use B, or I can use C to answer D, because in this case, for example, this is GNP and this is GNP. It is the same. Because it is same means I don't have to adjust anything on that part. What I need to do is, previously you are at market price, but now you want to know at factor cost. So the formula said, if from market price you want to change to factor cost, you need to minus indirect tax and plus subsidies. then you will get the answer for your GNPFC. So remain this item, write it down, continue the formula, minus indirect tax and plus subsidy. So this GNPMP, you have the value 267.1. Indirect tax and subsidy, you can still recycle back this item from the table and put it here, and you will get the final answer 258.7. And the last one is the formula for national income. Go back to the formula. What is the formula for national income? National income equals to GNPFC minus depreciation. In this case, you already have this GNPFC. What you can do is you can just take the value for this GNPFC and then you minus depreciation. So go to your table and minus your depreciation, you will get your national income. And remember, if you cannot find the term depreciation in the table, try to look for capital consumption. Okay, next we go to another example of expenditure approach. Remember, expenditure approach always start with GDP MP equals to C plus I plus G plus X minus M. Before you answer, go through the item and identify. Public consumption, I will denote as E because it is under the first formula CIGXM. Okay, remember the word public. Okay, and then private consumption, this is also expenditure approach. It is inside the CIGXM formula. Public and private investment, this is expenditure. Change in stock, go back to the formula. Okay, change in stock or change in inventory is part of investment, so it is under expenditure. Good and services, and you can see exported, the terms exported, so export also under the formula for expenditure approach. So export as well as import, and remember this import you must minus in the calculation. And then item number 8 is net factor income abroad. So if you still remember, when you want to change from GDP to GNP, you need to plus FIR minus FIP. And sometimes instead of giving you separately FIR and FIP, the question can actually deduct that for you. FIR already deducted for FIP, and they will name it as net factor income. So this, you use this item if you want to change from GDP to GNP. When you use indirect tax and subsidy, when you want to convert from MP to FC. When do you use depreciation? Depreciation when you want to calculate national income. Employees Provident Fund or EPF, this formula or this item comes under the formula personal income. Tax on personal income, this one is for P paid, personal income minus personal income tax. That one is under disposable income. Transfer payment, this one under personal income. Then this is the only item that you plus with the national income. Social security contribution, this is also personal income. Retained earning, this is personal income. Insurance premium, this is personal income. So always start with GDP, MP. Regardless what is the question asked to you, always start with your first step for that approach. And from that first step, then you will convert it to become whatever the question wants you to solve. So GDP MP equals to CIGXM. Whatever I have denoted as E, I will plus everything except the import part. Okay, so plus everything, you will get the final answer. Remember, start with the formula and then the calculation. the final answer together with the units. And then to answer question B, use A to help you to answer B. In A, you are in market price. B also in market price. So what can you do? From domestic to national, you need to plus FIR minus FIP. But wait, in this table, you are not given two items. So if you are not given FIR and FIP, you can use the other formula, plus net factor income. So remain this item, GDP-MP plus net factor income. So GDP-MP, you have this value. Net factor income, you go to the table. So you can solve this. To answer C, can you use B? Yes, because this is GNP, this is GNP. So from market to factor cost minus indirect tax plus subsidies. So remain this item, GNP MP minus indirect tax plus subsidy. This GNP MP, you already solve it. So take the value and put it here. And then minus indirect tax plus subsidy, take it from the table and solve it. To calculate D, national income, the formula is GNPFC minus depreciation. GNPFC, you already solve it. So just take the value. Minus depreciation, go to your table. That is your depreciation. So you will get the answer 76900. Don't forget the units. Question E, to calculate personal income, the formula is national income plus transfer payment, and then you have some other long items that you need to include. And normally in the table, they won't give you like all the items, but you need to remember the formula and identify which item that should be included. So only one item that you will plus with the transfer payment, one item that you will plus the national income, which is the transfer payment, and the other item you need to minus. And finally, for disposable income, the formula is PPAID, personal income minus personal income tax. So to solve disposable income, you need to solve your personal income first. So next we move to the product approach. So the product approach, the formula is not CIGXM, but for the product approach, because we have too much of this economic sector, so you cannot just outline everything, it's too much. So that's why we just use the formula as all final goods and services. So the formula would be GDP MP equals to all the value of all final goods and services. So whatever talking about economic sector like agriculture, construction, manufacturing, fishing, wholesale, restaurant, tourism, hotel, or whatever that talking about the product or the output or the economic sector. So you plus everything, and that would be your GDP at market price. So I will denote P to represent product, and all this item that I have denoted as P, I will add all, it will become my GDP at market price. So we start with the first item, agriculture, this is product, fishing, this is product, forestry, this is product, manufacturing, this is product, construction, this is also product, banking and insurance services, this is product. Remember, all final goods and services. Other services, this is product. Indirect tax and subsidies, you use these two items when you want to convert or change from MP to FC. FIR and FIP. So how to detect which one FIR, FIP? Factor income from. From means you receive. To means you pay. So this is item when you want to change from GDP to GNP, And depreciation, you use it to answer for national income. So let's start with the first one, GDP MP. The formula is all final goods and services. So if you use the formula CIGXM for this case, you won't get marked for your formula because this is not expenditure approach. So show the calculation and write down the final answer together with the units. And then for B, for example, let's say question asks you to calculate GNP, MP. So compare with A. A already in MP, so you don't have to adjust. So from domestic to national, you need to plus FIR minus FIP. You will get this answer. So remain this GDP MP plus FIR minus FIP. You will get your final answer 1770. Don't forget the units. And then question C, GNPFC. Compare with B. Can you use B? Yes, because this is GNP, this is GNP. You need to convert from market price to factor cost minus indirect tax plus subsidies. So remain this item, GNPMP minus indirect tax plus subsidies. Take this value and indirect tax and subsidy, you can get it from the table. So you solve this, and finally to calculate national income, the formula is GNPFC minus depreciation. GNPFC, take the value, and depreciation, go to the table, and you can solve your national income. So sometimes how the question can test you will be, instead of asking you step by step the GDPMP and then GNPFC and then ask you the national income, they can straight away ask you A, calculate national income. So although they ask you directly to calculate national income, you need to start with the step. First must be GDPMP, then the GDPMP, you convert it until it becomes GNPFC, and you minus the depreciation, then you solve your question on national income. Okay, so this is another one example on the calculation. So to answer this, first identify, because the question didn't mention whether this is expenditure or this is product or this is income approach. So you need to identify by looking at the item. If most of the item are talking about the expenditure, such as CIGXM, then you denote it as E and you calculate using that formula. If most of the item talking about the economic sector, such as agriculture, construction, manufacturing, so you know mostly talking about product, then you use product approach. And then sometimes they can also test you by including item from the other approach. So what you need to do in that case would be look at the dominant item. If mostly all the item comes from only one approach and only one or two items comes from the other approach, so in that case you can just cut that from the table and use only the approach that have the majority item in the table. Okay, so here banking and insurance services, this is product. Agriculture and fishing, this is product. Mining, construction, forestry, this is product. Manufacturing, product. Other services, product. Depreciation, this is when you want to calculate national income. Tax on expenditure, remember, although you have the name expenditure here, but remember, go back to your formula. Tax on expenditure is the other name for indirect tax. So write down, this is indirect tax. And you use this two item when you want to change from GDP to GNP. And then you have factor income received. From means receive, and this is paid. You use this to convert from GDP to Okay, sorry, this is typo. It should be from MP to FC, and this one from GDP to GNP. So now, to calculate GDP at market price, remember, this is the first step. It's the same with the first step. So since most of the item talking about product approach, so you use the formula all final goods and services, and all these P item you plus all, it will represent your your GDP at market price. To answer B, you use A. So this is GDP, this is GDP. So from market to factor cost, you need to minus indirect tax plus subsidies. And then you can solve that. To answer C, this is same, factor cost. So from GDP to GNP, you plus FIR minus FIP. For question D, you already have this GNPFC. So this is the formula, GNPFC minus depreciation. So after you answer this, put the value here and minus the depreciation. And finally, in this case, question asks you GNP and market price. What you can do, you can use any other question to help you with this. So find any question that have similar item. For example, you have A at market price, and this is also market price. So you can just convert GDP to GNP by using formula plus FIR minus FIP. So always you can recycle the formula to change from to domestic to national. What will be the formula from the market price to factor cost? The other formula. Okay, another one, exercise question. So the first item, government services, this is product. Net factor income, so this is net factor income, this is item to convert from GDP to GNP. Transfer payment, this item comes under formula personal income. Export, X, it comes under CIGXM, the expenditure formula. Mining and quarrying, mining, this is product. Manufacturing, product. Indirect business tax, indirect tax. So this one, when you want to change from MP to FC. Depreciation, when you want to calculate national income. Subsidies, this one from MP to FC. Private investment, this one under CIGXM, expenditure approach. Electricity, gas and water, this one economic sector, so this is product. Banking and tourism services, this is product. Rent, if you still remember, rent comes under income approach. Land, labor, capital, entrepreneur, and the returns to land would be rent. So this is income. Income I will put as I. So in this table, you have three approach: product, expenditure, and income approach. But you can compare. For product, you have 1, 2, 3, 4, and 5 item. For expenditure, you have 1 and 2 item. For income, you have only 1 item. Means majority would be majority talking about product, while 2 for expenditure and 1 for income. So these 2 you can cut from the table. So export you can cut, private investment you can cut it, and rent you can cut from the table. So when you want to calculate for GDP MP, the first step, do not use CIGXM because you know the dominant will be product approach. So you use the formula all final goods and services, and all item that you have denoted as product, you plus all, you will get your GDP MP. To answer question number 2, compare with number 1. This is GDP, this is GDP. So do not adjust this. So just adjust this one. MP to FC minus indirect tax plus subsidy. So your answer for number 1, you minus indirect tax and plus subsidy, you can get the answer for number 2. From number 2 to answer number 3, you can see this is factor cost, this is factor cost. So you don't have to adjust. So you just take this answer and then you convert this plus FIR minus FIP. You can solve number 3. And then to get the answer for number 4, national income, the formula is GNPFC minus depreciation. So you can solve for your national income. So after national income, they can also ask you about personal income, disposable income. So the most important would be to just remember the formula, remember the other name for the item, and then you just apply the formula and you can solve the question.